Hello, hello. So today I want to share a little story about how one of our clients, she is taxed as an S Corp. And when you are taxed as an S Corp, there are a lot of different things that you have to do to stay compliant. One of those things is to keep up a report or documentation on how you came up with your reasonable salary. So this client sent me a message and was like, Jennifer, I am paying myself about $40,000 more in 2025. She paid herself $40,000 more than what the reasonable compensation report said. And I explained to her that it's okay that you're paying yourself more. And so that's what we're going to talk about today. My name is Jennifer Drew. I am the founder and CEO of Hair CEO. We are a business advisory and accounting firm tailored to self-employed hair professionals and hair business owners. We help them run legitimate, profitable, and bankable businesses by providing coaching, bookkeeping, and tax services. And we are in what's called the 2026 Tax Talk series. And so every day for 90 days, I'm bringing you different topics catered, of course, to the hair profession. So let's talk a little bit about the reasonable compensation and being an S Corp. When you are taxed as an S Corp, the IRS has this rule that you're supposed to pay yourself a reasonable compensation. And what that means is that if you work in your business, then you are supposed to take a salary, and that salary is supposed to be what you would pay someone else to do what it is that you're doing. So you as the business owner, whatever you do for the business, let's say you are behind the chair and you are a barber or a hairstylist, and you're doing that in addition to being the business owner, then you need to pay yourself a reasonable amount that you would pay someone else to be behind the chair for your business. And so, like I mentioned, this client came to us because every year, like this documentation, the IRS says that you have to keep this documentation on file of how you came up with how much to pay yourself. Because if you're ever audited, that's one of the things that they're going to check for. You know, the S corporation has a lot of benefits, but you have to make sure that you're doing what you're supposed to do. And of course, working with a good accounting firm is going to make sure that all of your T's are crossed and your I's are dotted, like we do at Hair CEO. But let's go back to this reasonable compensation. So this is what trips up a lot of people. Now, this particular client was paying herself way more, $40,000 more. And her concern was, Jennifer, am I going to get in trouble with the IRS? Like, you sent me this report and it said my reasonable compensation had to be here, but I'm actually paying myself up here. Like, am I going to be in trouble with the IRS? So I drew out something because, of course, it's easier to explain it this way. So when it comes to a reasonable compensation, you have to look at where you're located, what county you're in, where you work, not just your state, but down to the county. And then you have to calculate how often you're working throughout the year, and you have to determine how much you would pay someone at that market rate. That's one of the ways in which you can document how you came up with your reasonable salary. Now, before I go into any further, I just want to say thank you so much for everyone who is live. If you are joining me live and you are taxed as an S Corp, put an S Corp in the chat and let us know. But if you are not, just put, put sole prop or something like that, or put sole, and let me know if you are taxed as an S Corp or if you are not. And we have Tara in the comments. She is an enrolled agent here at Hair CEO. So if you have questions during what I am explaining, put it in the chat and she will love to answer your questions. So back to this, this presentation here. The IRS is basically trying to make sure that when people make that S Corp election, that they don't pay themselves below a certain amount. So they're going to give you, they say, okay, we have to create a floor. We want to make sure that you are not paying yourself less then this is just an example. So these numbers, do not pay attention to these numbers. This is just for the visual. So let's say for where you work and where you live, the reasonable compensation is between 20 and 50,000. And I know that's a big range, but just stick with me here. So in the event that you are living somewhere where your reasonable salary for what you do at your barbershop or your salon is between 20 and 50,000, then the IRS is going to want to see a salary in this range. Now, if you pay yourself 15,000, now it's going to be a problem. Now it's going to be a problem because you're paying yourself $15,000 when the reasonable compensation for this role that you have in your business should be in this range. So for her, she was actually above. Now, the IRS is not going to care that she's all the way up here with her salary. Matter of fact, they like it because the more money you make, the more money you have to pay in taxes. Then you might be thinking, well, Jennifer, why would she want to pay more in taxes? It could be a strategy because not everyone is in the same boat. And when it comes to taxes, it's more about the strategy than it is just a blanket, one size fits all. That is why it is so important, as you're listening to these lives that I'm bringing to you every day, you want to make sure you're just listening to it from an educational aspect. This is not tax advice for you. If you want unique tax advice for your situation, it's going to be very important that you talk to your tax professional. Of course, I would love to be your tax professional. You can use the link down below and work with us for the 2026 filing season. But you want to take all of this as education because your situation may be completely different. Now, in the case of my client, yes, she's paying herself about $40,000 more than whatever her reasonable compensation report says she should have been paying herself. And I had to explain that the IRS is not going to be upset about that. She's definitely not going to get in trouble. The only way she would get in trouble if it was down here, below the reasonable compensation amount. Now, again, you say, well, Jennifer, why would anyone want to pay themselves more if she's going to pay more in taxes? Well, the reason could be multiple. One, maybe this person is trying to get approved for a house. It is always going to be so much easier to get approved for a house if you have a higher W-2. Now, yes, even if she wasn't taking, let's say she had $40,000 extra dollars, but she didn't want to pay herself in a salary, she wanted to pay herself in a distribution. You might be asking, okay, well, can't they take the profit from her business as a part of her income? Yes, they will. However, that's riskier because when a business has a W-2, you're saying this is the salary that this person makes. It's not dependent on the business fluctuations. But if you're saying, okay, I paid myself $20,000, but my business had profits of $80,000, so altogether I made $100,000. Yes, you may get a house that way, but you risk it because the lenders might be like, you know what, that's too risky because on W-2 they only make $20,000. They may have a really bad year, and then that $80,000 was just luck. So that's why you have to be careful, and that's one reason why you may want to go ahead and pay yourself more in salary. Another reason that you may want to pay yourself more in salary than the reasonable compensation amount is because you might be doing what's called retirement scaling. Now, this is when you have retirement linked to your payroll. There are a lot of retirement accounts that base how much you can contribute based on your salary. So, for example, 401k is like this. You can deposit or set aside for retirement a percentage of what you are paying yourself in salary. So that's a way to scale your retirement by paying yourself more in salary. So that's another reason. And then the third reason that you may want to pay yourself more in this reasonable salary is because this is the amount that your Social Security is based off of for later in life when you're ready to collect Social Security. Now, again, I didn't say again, but you may not want to rely on Social Security, but it's a real thing. And it's there for you. So if you are paying yourself more in reasonable salary, you have to understand that your Social Security benefit, how much you're going to receive when you are eligible for Social Security, is based on the 10 highest grossing earning years that you've worked. So this might be a strategy to pay yourself more because you're trying to make sure that you have a good 10 solid years of a high income so that you can maximize what you're getting back in Social Security when it's time for you to collect Social Security. So those are just 3 reasons why you might want to pay yourself more than what the reasonable salary documentation says. So those are the 3 things I wanted to share. You're not going to get in trouble if you are, paying yourself more than a reasonable salary, but you definitely do not want to be here because this is where the IRS may audit you. And let me tell you what that looks like. Let's say you've taken $15,000, but you had business profits of $80,000, right? So the IRS is going to say, oh, so you're taking advantage of the S-Corp, are you? Okay, well, we are going to redistribute that profit and turn it into reasonable salary for you. And then they're going to tack on penalties and interest and then still the Social Security amount that you were avoiding. So you don't want the IRS recategorizing your income for you. Now, the other part of that is you might say, well, Jennifer, I'm an S-Corp. I paid myself $15,000. Yes, the reasonable compensation report says that I need to be somewhere up here, but my business is not bringing in that much money. Like I don't have enough to pay myself up here. Then you are okay. If you are down here because the business couldn't support paying you up here, then you're fine because you're not gaming the system. You're only gaming the system if you are taking a low reasonable compensation and then taking more in profit to avoid the taxes here. So I hope this was helpful. I've went on ahead and scheduled some more live topics just so that you are aware of what's coming up so you can join in the future and get your questions ready for the comments. I see that there's some comments here. So let me see before I log off. Let me see if I can get to some of these questions. If Tara hasn't answered them all, she probably has. One question says, reasonable compensation. How should I factor in self-employment taxes and the cost of private health insurance for myself as the owner? Ooh, this is a good one. Yeah. Tara says, do not factor self-employment tax or private health insurance costs in your reasonable salary. Okay, so Tara may have, so do not factor in. So actually, correct. Do not factor in self-employment taxes, but with your health insurance, I actually do like to factor in health insurance in your reasonable compensation. However, a very particular way because you have to be careful. Tara is absolutely right. But you can also add in as a reasonable compensation how much you're paying and contributing to your health insurance, because what you pay in health insurance actually has to be recorded. If you are taxed as an S-Corp, has to be recorded on your W-2. And is it box 1? Yeah, in the wages, not the taxable for self-employment, not for the employment taxes, but in box 1, it can go in there. So there is ways, but again, that's something that you want to make sure that you're working with your tax professional for, because Tara is right. That's not something that you want to get into. That is more of a higher level, talk to a tax professional, because Tara is right. You do not want to factor that in yourself. That's definitely higher level. You want to make sure you're working directly with a licensed tax professional to help you with that. Let's see. compensation amount vary per year. Do I need to adjust accordingly? Yes, absolutely. That's a great question, because your salary may adjust annually based on the amount that the market supports. So that's why you have to have a different reasonable salary report for every year. And that's something that we do at Harris CEO. Every year, we, for our S-Corps, that's something that we're doing. We're running that reasonable salary report. We're letting our clients know, like, hey, this is based on the salary, statistics and labor market for your area, based on what you do, based on where you work, and how many hours you work per year. So we're running that report, and we are adding that to their folder, letting them know, and then cross-checking it with how much they're actually paying themselves, so that if we may need to make any adjustments, and making sure we also pair it with what their goals are. We're having meetings with our clients annually saying, okay, what are the big goals this year? If you're trying to buy a house, all right, let's give yourself a raise, because we need to show banks that you don't have a problem paying that mortgage, So that's something that absolutely can fluctuate. Now, I will tell you, it doesn't fluctuate by a lot, but we just want to make sure we're keeping that report updated. Because if you think about it, like, for regular jobs, people get cost of living increases. And a lot of times it's about between 3 and, well, actually, I guess cost of living has gone up a lot. So I would say between 3 and 5%. So that might be something that, that report is going to show, maybe a 3 to 5% increase for the cost of living. All right, we have some good questions today. All right, well, I think that's it. I really appreciate the engagement today, because let me tell you, it is hard coming in here 90 days straight. I mean, we're only on day 19, but it is hard sometimes talking to a room that is blank. This whole YouTube live is completely different for me. Instagram live is a little bit more lit. But I do appreciate you guys. And of course, I know, we had quite a few people in here kind of in and out of the live today. So I appreciate you guys sticking around with me. If you are catching the replay, leave some questions about this particular topic. This is something that always kind of, trips people up. So I do read all of my comments, and you do influence what I post and, my topics for future lives. So please, please, please leave a comment, even if you're in the replay. And, I might be doing that topic next. All right. So again, I'm Jennifer Drew with Harris CEO, helping simplify profits and taxes for self-employed hair professionals and hair business owners. And I will see you tomorrow on the next episode of 2026 Tax Talk.